You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again to commence our broadcast week here as I adjust my microphone because we are on the fly. We are on location, listeners. We are not coming at you from the glorious studio there in Chi-Town. No, we are coming at you from the southern studio today, taking a little bit of a trip for the holiday season. But you know what? That doesn't mean the network stops. It doesn't mean your flow of content, your endless flow of content stops, because we are here coming at you live at our usual OB time, same OB channel. My name, of course, Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are binging and driving up my bandwidth bills these days. Welcome to all of you out there on demand or you live, however you get access to our stuff. Welcome to you all. Remember, if you like what you hear, you're on the on-demand side. All we ask, hey, you keep rating and reviewing. Clearly, it has an impact on your fellow listeners. It is helping them beat a path to our door and continue to drive up my bandwidth bills. So thank you for that. And of course, if you want to go above and beyond, you want to join us with all sorts of great pro, fun, exclusive content. Last week was a Pro Palooza. You guys got a ridiculous amount of content. You had two great pro Q&As, none other than Uncle Mike himself, as well as John Smolin making a rare appearance in the hot seat to break down all sorts of fun, talk some options, conspiracies, and all sorts of fun, answering all your questions there, as well as options oddities. Of course, you pro folks also got access to a double dose of Options Bootcamp Live last week, as well as a double dose of Options Playbook Radio, including a very rare live huddle episode. Don't get those very often. You got that live in your ear holes last week if you're on the pro side. Everyone else will be waiting until it hits on demand on the network this week. So if you guys want access to all that exclusive stuff, the early content, the giveaways, the live streams, the pro podcast feed that has somewhere closing in on 200 exclusive episodes. If you guys want access to all that fun stuff, there's only one place on the planet you can go. TheOptionsInsider.com/pro is the place to go, listeners. And now, because I like you folks, and because I like them, and I wanted to give them a chance to continue vying for this greatest of prizes here. Of course, I'm talking about that rare, exclusive, vintage SDCC Sergeant Slaughter here, complete with all sorts of scaled up for the modern era, but still looking old school, vintage G.I. Joe style there. Listeners, we are going to do once more, or name that 80s wrestler via their entrance music. We're going to do the medley style again. And I do believe as we speak, the Meatball is up 1. So this is a crucial week. Can the unklest of Mikes pull it out? Put on your listening caps, listeners, because it's time. Can you name that 80s wrestler via their entrance music? Here we go. Ding. guess all three. Wait till all three. It's a medley.
Ding.
Don't go messing with a country boy.
Country boy, country boy, country boy. Don't go messing with a country boy. Don't mess with a country boy. Ding.
All right, so we got some dings, listeners. There's our medley for this week. The Meatball, learning how this game is played, binging in early and often. So I heard your bing first for the first one. Technically, it's kind of against the rules. I can't mute you guys down here, so otherwise you wouldn't have been able to hear those bings. So it's a bit of a technological snafu. But nonetheless, Mr. Meatball, you are in the lead. You did bing twice versus Uncle Mike's once, so volume of bings.
I was listening to the rules. I wanted to wait till all three of them were there.
I heard you singing along to one of those. Okay, so let's go Meatball first. How many of those three can you name, sir?
Well, I know the first two. It's Piper and Hillbilly Jim. Then the last one I'm going to have to take a guess on, but it was very, imposing and tough. So I'm going to say that's a heel. And what better a heel than, let's go with Bam Bam Bigelow.
Okay, that's 3 for 3 that he guessed. At least I'm not saying they're all right, but he has guessed 3. Mr. Uncle Mike, do you want to try to chime in, disagree with any of those? What are your 3?
I'll agree on the first two. Those are fun ones. I haven't thought about Hillbilly Jim in a while. That was kind of fun to hear. I'm gonna go with Vader for number 3.
All right, so neither of you got number 3 right. That was the Hart Foundation. I thought that kind of an easy one, but you guys missed that one.
Yeah, I almost said Bret Hitman Hart.
Yeah, that's Hitman's music is also the Hart Foundation. It's kind of the same thing.
Yeah.
And then the first two, pretty easy, obviously. Roddy Piper, a legend. And Hillbilly Jim, he's more of an acquired taste, but still an interesting one out there as well. So there you go, listeners. Did you get those right? Hit us up, let us know as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And ever since Powell kind of delivered that old 1-2 to the market last week, everyone's been wondering and waiting with bated breath. Can we maybe catch a break? And the answer for today is not so much. Listeners, most of the major indexes taking another hiatus to the downside. S&P off about 0.2% as we kicked off the show. NASDAQ once again leading the charge, off about 1.2%, and the Dow off a paltry 0.3%. So the S&P right around 3830 when we kicked off the show. So closing in on that 3,800 level, a far cry away from Uncle Mike's magical 3,900 or even the 39.5 we were hanging out for a while, and certainly a far cry from the 4,000 level we were at not too long ago out there, listeners. Of course, all this red on the screen, not exactly doing a lot to keep vol in the green. In fact, we are coming up on a holiday week, listeners, so folks are just, I guess, trying to get the heck out of Dodge as fast as they can. VIX coming in again as we kicked off the show at about a 2180, puts it down a little over a point, about 1.1 points. VVIX, the vol itself, at about a 90, down about 2 points from where it was this time last week. VXX, our old friend we had kind of washed our hands of, now trying to stick its head back in the conversation, say, hey, don't forget about me. 1460, down about 4 points from where it was this time last week. UVXY, 7.25, down a whopping 0.25 point, so not getting its reverse split, also not exactly moving super aggressively to zero right now. SVIX, 14.25, up 0.25 point. You kind of see where I'm going here, listeners. UVIX, 630, down 1/3 point. And VolQ, a.k.a. the at-the-money vol of the NASDAQ. Don't you try to throw any skew there. No skew in VolQ. Straight at the money vol. 25.30, down about 1/3 point. All right, Mr. Meatball, you have taken now a 2-point lead. I think Uncle Mike, I think the best he can do, I think we have 2 weeks remaining, might be the best he can do is tie, in which case we'll have to have a tie.
Now, hold on. If you're accepting his first initial bing, he should not get the right to listen to the second two songs.
Well, no, it's the whole medley. He binged in too early, so I did not acknowledge his first bing. Then he binged again, and then so.
But then he shouldn't get the right to listen to it. Oh.
He should be off the rest of the. He listened to the whole medley, so the medley was meddled.
But you're basing his bings on you're not giving. No, then I'm officially binging for next week. Then
he could have
based on your logic.
Well, we'll see. We'll see. Maybe I will.
So
give
for
you,
next week's wrestling, bing! I'm in right now. I get to go first, no matter what.
As you'll recall, I tried to give you the first swing at the bat on the first of these medleys, and you declined, sir. So hey, do not get mad at me.
I chose to pass. I strategized. This is rigged.
Your strategy has backfired upon.
This is rigged.
Backfired upon. All right, so he's up by I think 2 points now. So. It will take an effort, but Uncle Mike can tie it, in which case we'll have to come up with a fun tiebreaker. But Mr. Meatball, sir, what is lighting up your tape out there today?
Yeah.
Ill-gotten gains on a Sergeant Slaughter. That's what it's got.
Besides that, and besides what I would say is that we are in full-on holiday season mode and volatility. They are taking the VIX out to the woodshed. And wait, you're saying, Mark, you're leading with the VIX? Yeah. The whole market's down. The NASDAQ's down over 1%. The S&P has tried to be down 1%. The Russell's down. The Dow's down. And VIX is down. Has been down as much as a point. Why? Well, we're heading into the holiday season. Traders are taking their time off. They're not expecting a lot. Vol is soft. The market is soft. It's really been just they're just taking vol out to the woodshed. The other thing that's hitting me in the face is Apple. Which for a brief moment was really threatening to break below 130, and then found some buyers, probably in oversold condition. The other kind of piece is the oil names. The Biden administration out saying, yeah, we're buying oil for $70. Yeah, we're going to buy oil down here. The best oil trader in the world is apparently the federal government because they were selling at 95 and they're buying for 70.
Yeah, they're doing pretty good out there, I think.
Boys. And then I'm keeping a tight eye on some of the major banks, which do look stronger today. And then, we got to circle. The bonds are king, and bonds are down. We got a day where where bonds and stocks are down all at the same time. So rates are going up a little bit. The ones what's really getting killed is some of these momentum names. Your plugs, your lasers. You're basically, if it's in the ARC portfolio, it is getting punched in the face. They're down big, and your Amazons and Googles and Microsofts and Teslas. Tesla's now positive on the day, but some of your mega caps are getting a little bit of a face punch as well.
All right, a man who never missed a good face punch that he didn't like, Mr. Uncle Mike. He's probably considering a good face punch for you right now, Mr. Meatball. Mr. Uncle Mike, sir.
I would not want to be on the receiving end of that.
What is lighting up your tape out there, Mr. Uncle Mike, in addition to all your umbrage?
I have no face punching umbrage with Mark Sebastian. There's a different Mark on the other hand that we can discuss at a later time, but for the benefit of the and I'm a peaceful man. I don't think I've punched a person since the 8th grade. This kid in gym class, but that's another story. I'm a peaceful man. But anyway, just in looking at the markets today, I would totally agree with Mark in that we are definitely in holiday mode. The tune Santa Claus is coming to town. Is it going to play or is it not going to play? We will see over the course of the next week or two. But as of right now, I'm not convinced we are going to get a Santa Claus rally this year. So unfortunately, I think it's going to be more of a Grinch rally these next couple of weeks. But I could be wrong. I hope I'm wrong. But we will see. In looking at this market, the thing that does stick out to me the most right now is that nothing is sticking out to me right now. We're not getting any earth-shattering movement in pretty much anything at this point in time. And right now, I think that we're waiting for the end of the year, waiting for to see what happens early on in the year of 2023. I believe that the movement that we are getting right now with the S&P going down, at least on today, or at least with what I'm looking at with my clients right now, not that I'm moving the market by any means, But I believe that as I'm looking at this, I'm doing some tax harvesting and thinking about, okay, if we can sell this, this gets us a capital gain, or this doesn't get us a capital loss, or whatever. And as I'm looking at things like that, I think that's really the only motivation that anyone would have right now to buy or sell within the next couple of weeks with a sense of urgency. Am I looking to buy a stock right now because I am just that convinced that I want to be in on it over the course of the next 2 weeks? No. Am I looking to sell a stock because I'm just that scared to be out of it over the course of the next 2 weeks and the events that are likely to ensue the last 2 weeks of the year? No. But I am very motivated to do some things for clients from a tax standpoint of trying to make sure that we can take gains or take losses, or the other thing is make sure that we have money set aside for RMDs. I was just doing this earlier today, doing some RMDs for my clients, and what that means is that if you're old enough and you have an IRA account, you legally have to take distributions from your IRA account after age 72, or when you're 72 or older. And then when that happens, if you don't, the IRS puts a nasty tax penalty on you. And when I mean nasty, I mean really, really nasty if you don't do that. And so it's something that you got to get done. Now, what myself and pretty much anyone who looks at RMDs, you want to take your RMD out as late as you can so you can get as much gain on it as you can in theory. So a lot of people take RMDs towards the end of the year. And those are the only motivations that I can see over the course of the next couple of weeks for buying or selling with a sense of immediacy. If you want to get in for a longer period of time or you're moving money for various reasons, then yeah, that's fine. But that's going to happen all year long. In terms of the sense of urgency for buying or selling that has to be done in the next couple of weeks, those are the only reasons I see.
Now let's see what reasons we see out there, listeners, as folks are slinging paper, or perhaps not so much out there. Let's go out to the vol space first. Our old friend VIX actually putting up some numbers, which again kind of mystifies me why the ADV continues to erode when pretty much every day last week we saw days well north of that, right around 525,000, which is the current ADV right now. You'd think threatening 1 million a couple times last week, and every day closing over 500,000 well above 500,000 would certainly be enough to get us a little bit higher, but alas not. Today also on trajectory for a decent little run, 354,000 contracts on the tape in VIX right now. SPY also looking pretty robust, 4.3 million contracts to ADV, about almost 8 million, 7.85 million out there in SPY land. The S, 1.25 million contracts. That's actually kind of light given the tsunami of ridiculous zero DTE paper we're seeing out there these days. That has really just changed the game for the S. It wasn't that long ago, listeners. It was probably the beginning of this year I was saying, oh, if we're at 1 million contracts with this time in the S, that's a lot of paper. And then the game has just changed completely. This zero DTE explosion is just ridiculous by every measure of the imagination, and it's gonna be an interesting thing to watch going forward into 2023. The ADV right around 2.5 million contracts right now, so the S on track for its ADV right now as well, pretty much exactly. The small caps, IWM, looking kind of light. Only 371,000 contracts on the tape right now, even though that ADV has come in a bit as well. It was around 1 million not too long ago. This new lower 732,000 ADV, 371, kind of right on pace to hit that. And the Qs, 1.41 million out there, the ADV, 2.61 million there. So the Qs looking robust. The Qs and the S and VIX are the three that are threatening their ADV out there today. Let's move out to the single names, listeners, see what's lighting things up. I have said it before, I will say it again. You know, when Apple's at the top of the list. When Alphabet makes the list, listeners, that is probably a pretty quiet day out there, and that's pretty much what we got here for number 10. Only cost you a paltry 151,000 contracts to break into the top 10. So that gets you to our old friend Google, aka Alphabet. They're always busy, but they're usually not top 10 busy unless something's going on out there. So when they're breaking into the top 10, you know it's probably a pretty quiet day. Number 9 and 8, we have a return of our friends, the Symbol Twins. First, we've got AMD here at number 9. AMD taking a rare hiatus outside of the chip zone, listeners. Usually we see them somewhere in the 4 to 6 range. Today at Number 9, AMD right now, by the way, 64.40, off about exactly a buck. Good for 176,000 contracts out there on the tape. And then right above it, listeners, its old friend AMC, giving up a lot of the ghosts back there, back to below $5 again, 498. It is threatening its 52-week low right now of 470. Yeah, in fact, no, I put it in this morning. The 52-week low was this morning, 478 out there for AMC. What a wild year it has been for the reigning king of the apes. $30.30 is where it was going into the end of the year last year, listeners. And they came for it, got down to about $14, $13.96 actually in March. Then they tried to rally it again. They said, nope, the apes are back, almost $30 again by the end of March. Then they came for it again by May, got back down to $10, listeners. Then they rallied it again in that August run-up, right? They got all the way up to about 24.25. Looks like that was the top, maybe a little higher, 25.5 actually in August 11th, and then they just came for it again. By August 24th, it was back down to $9, and it's pretty much been drifting lower ever since. So, wow, what a saga it has been for the reigning king of the apes today, number 8, 153,000 contracts. Number 7, listeners, we got good old Softy. Good for 218,000 contracts on the tape. Microsoft's been a weird one to watch of late. It's down today, down $4, and you could argue probably should have been doing that last week too when all these rumors were circulating that, hey, the Justice Department is coming for you. They actually rallied into some of that news and after that news for a while as well, which was a little fascinating, a little head-scratching out there. And the DOJ is kind of coming at you guns blazing. Not usually a positive sign for a stock, but they rallied through a lot of that, and now, of course, post-Fed, they've been taking their medicine like everybody else, down 440 today, or about 1.8%, trading right around $240.30. Number 6, our old friend Ford. Haven't talked about them in a while, making their way back into the top 10 today. Ford, good for 248,000 contracts today, listeners. Ford, $11.69, off about 43 cents, or about 3.5%. It's still about a buck and change north of its 52-week low. That came at $10.50. Actually, $10.61 looks like. So a little bit above that, but still coming for a little bit of Ford. Ford was feeling memey last year. This year, not so much out there. Let's go to our number 5 offender. Easy for me to say to listeners. Number 5 offender out there today, listeners. That's the artist formerly known as Facebook, now known as Meta Platforms Inc. You know, the name just rolls off the tongue. 116.25, off about 320 or 2.7%. Good for pretty much exactly 250,000, 253,000 contracts to be precise. So that should give you a sense of what kind of day we're working with here, listeners. We're all the way halfway through the top 10. We're still pretty much at about 250,000 contracts. Number 4, our old friend NVIDIA, actually doing its job and hanging out in the chip zone, even if it is a little bit light out there. Only good for 263,000 contracts for number 4. NVIDIA hanging out 164 even right now, off about $1.70 or a little over 1% on the day. Number 3. The Amazonians. The Amazonians been hanging out at number 3 for a while now. It's they have that spot on lock. 562,000. Let's talk about a jump. It's almost exactly 300,000 contracts. 299,000 contract jump. 300,000 contracts, pretty much exactly separating the number 4 and the number 3 spot listeners. That gets us to the Amazonians. Amazon right now off a little over $2, or about 2.3%, trading 85.84 out there right now. Then we go off to number 2, again, another one. This top 3 has kind of been on lock for a while now, listeners. Ever since this new era of Tesla has moved in and kicked them into high gear, they really have kicked Apple to number 2. Amazon, since their reverse split, or I should say since their split, has taken over the number 3 spot, and it's kind of been on lock that way for pretty much the second half of this year. And again, number 2, hanging out, the fruit company, Apple, 562,000, actually, I'm sorry, that's Amazon, 881,000 contracts for Apple. And again, Apple off 1.8 points, 1.3%. As the Meatball alluded to, they were threatening their 52-week low. Didn't quite get there today. They got to their low of the year is 129.04. Didn't quite get there, but they were threatening 130, 131.67. They have rebounded at about $1.20 almost out there since that low today. So giving Apple a little bit of a lift again, but they were threatening that low. What are your thoughts? You know, we have that poll going up now, listeners. Maybe we should also ask another one, a follow-up for what is your level? What is your magic level on Apple? Everyone has that magic level. Is it the par level? Is it something else? I'm curious to know what yours is, listeners. As we get to the number 1 spot, you don't need me to tell you, it's the old Tesla 1.75 million contracts. Tesla, as Meatball alluded to, actually up right now, up about 2.4 points, trading 152.60. They have rebounded from their 52-week low, which was this morning, 145.82. So pretty much almost an 8-point rally since their low this morning. So quite the run here for Tesla after they came for it earlier. It opened to 154. They crushed it down all the way to 145.82, and now pretty much almost all the way back up to 154. So a lot of living to be done out there in Tesla today. Good for 1.75 million contracts. Obviously, we're kind of in the dregs, the tail end of earnings season, listeners here. Not a lot of big names popping off on this holiday week, but there are some names you have heard of. Like, I don't know, Nike popping off tomorrow, as well as FedEx and BlackBerry and General Mills. Wednesday, we have Rite Aid, a.k.a. RAD, one of the better tickers out there, and Micron, good old MU. I haven't talked about them in a while here on the show. And Thursday, a little bit of CarMax love. In fact, if you are so inclined, listeners, we do have some earnings reports coming up for those names. Let's go out to Nike first, or the 20th after the bell. 106 is where they were trading when we ran this report, listeners. They were pricing in $7.65. In the past, they moved $7.56. So not a ton of extra shoe vol lurking out there right now, about 30 cents. Nothing really crazy, but not a discount either. So interesting stuff out there. A good old Micron, 21st after the bell. 52.07 is where they were trading on our last report. They were pricing in $2.94. In the past, they moved $2.27. So there's a fair amount of extra juice lurking out there in Micron. Makes sense. That sector has been under some heat of late, so it makes sense to be pricing in a wee bit of extra juice out there. Let's go out to used cars. CarMax, man, that sector all over the place over the last couple of years. Folks getting ridiculous levels for their used cars. People getting paid a ton of money to return their leased vehicles. All sorts of madness going on out there in the used car front. CarMax, 12.22 before the bell. 61.44 is where they were trading going into this report. They're pricing in, get this, listener, $7.71. In the past, they've moved $5.63. So CarMax pricing in that the used car vol, at least for this cycle, not exactly done, listeners. Still more juice to be found out there in the used car segment. If you want the rest of the juice, listeners, the season is hanging out at about a 118%. I think we finished all of our revisions for the season. So week 1, 85%. Week 2, just the mother of all bangers, 217%. As long as we've been running these numbers, I've never seen a week like that. Week 3, 118%. Week 4, 127%. Week 5, 101%. And then week 6, the lone other underperformer at 98%. Take all that green, add it all together, you get 118% average for the season, listeners. So a pretty aggressive season by just about any measure out there. Also keeping an eye on 82 long straddles and 49 long calendars for your earnings trading information, education, and pleasure over there on the earnings trades report. You guys can find all that. You know where to go. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the latest top.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, it's time to get weird. It is time to get wild. It is time for the Odd Block. And Mr. Meatball, stop me if you've heard this one before, okay? Stop me if you've heard this story, this song and dance. Someone, I won't say who, but someone bought a whole freaking boatload of puts in a REIT this morning. Have you ever heard such a thing?
Yeah, crazy, right? These REITs have been getting absolutely slammed, and they just keep coming for it.
They cannot get enough.
Keep coming after it.
And it's all the same size. It's got to be a similar customer, if not the same customer, doing a lot of this paper here. Because it's all 10,000 lots kind of across. Sometimes you get a 20,000 lot, but usually it's just 10,000 lots across the board. And we got it going up again this time, listen. This is the name we haven't really talked about on the Odd Block. We have talked about it recently on Options Oddity. So go check out that one over there on the Pro if you haven't checked that out. This is Annaly Capital Management Inc. listeners.
Oh, yeah.
Trading right now, $21.50. Ticker symbol Nelly, NLY out there. Again, trading a rough year for them, a decent day actually for them, up about a dime on the day. On the year, like you know, with all REITs, it's been kind of just a bloody mess. 31.16 is where it was exactly a year ago, coming into the end of the year last year. And they pretty much have traded off pretty much about exactly $10. They actually hit much lower. Back in October was the nadir for this name. They got down to 15.11. So if you just look at the last couple of months of this year, it actually has been a little bit of a decent story for them. They've rallied from 15.11 all the way up to about $21.50 right now. Of course, you take the whole year in its entirety, bit of a different story. They're down almost 33% on the year. Of course, nowhere near as low as they were just a couple of months ago. And what did we find out here today, listeners? Well, I kind of let the cat out of the bag at the beginning of the show. There's someone coming in once again for $10,000. It's kind of just the trade du jour these days. Just a day that ends in Y. Someone's going to scoop 10,000 puts on some REIT out there. Today it is Annaly. It was 10,000 of the Feb 20 puts, paying 86 cents. Again, they kind of got a nice middle of the uprights kind of fill here. But if past is prologue here, given everything we've seen about every other REIT on the planet, they are most decidedly buying these puts. The IV is 36.5, so pretty decent amount of vol actually for a REIT. REITs are not known to be bastions of volatility, so over 33% is pretty juicy for a REIT. The stock was pretty much right around here, $21.59 when these puts went up. And between now, looks like there is an earnings announcement between now and February expiration. The earnings is going to be, I should say, on February 8th after the bell. So, Mr. Meatball, this put saga in all REITs continues. B, did this one come up on your big money flow, the BMF? And C, what are your thoughts on this latest addition to our REIT put palooza, sir?
Yeah, the biggest trade I saw today was this one did pop up. We've seen just like there was a big calendar spread in the REIT index. MPW just looks terrible. There are a lot of these names that look really bad right now.
And what about this one out here in Annaly? What is it?
Yeah, no, it looks like they bought puts. And this one pays a nice dividend. I know it's popular with retail investors, but it has had a rough slog. I will say that.
That it has out there, listener. Let's see who else we've got on our docket for us out here today, listener. I was just talking about these just a few minutes ago when we were looking at the most actives. It's our friend in the used car market. It is CarMax, listeners. Ticker symbol KMX. You don't need me to regale you with the saga of used car madness this year, but you know what? It's kind of my job, so I'm going to do it nonetheless. CarMax trading right now $59.50, off about $2 or 3% today on the year. Again, man, they just came for this name this year. It's off $72 or nearly 55%. I don't mean to laugh if you are a long CarMax listeners. That is painful. It's just been a rough year. A year ago, it was trading $131.75, got up to the high for the year of almost $140. It kissed it, $139.80, listeners. And then it pretty much has never looked back the entirety of the year. It looks like, except for, again, like our last name, except for the October period, they sold off, actually hit their low for the year back on October 21st of $54.85. Then they did try to rally it again in November. They got up to about almost $74. And then actually they hit 74 and about a half on November 11th. And then kind of right back down ever since. So they tried to buck the trend at the end of the year, listeners. But again, on the year, you're off 55% in this name. Just quite a drubbing, which, again, is fascinating given to see how much we've seen out there in the used car market. Dealers chasing down leases, paying $10,000 plus, bring your car back. It's crazy, getting paid to return a lease, but that's the kind of market we've been in for the last year, listeners. What do we find out there today, listeners? Another put palooza. This time we got the Feb double puts. So remember I said the stock 61.23. That's what it was when these puts went up. The stock right now 59.58. So it's like they're catching a nice little windfall on these puts. It's like they picked up 8,781 of these puts for $3.65. They were not giving these away, listeners. This was a 68 vol. These were pretty meaty puts. These are going out in February, listeners. Let's see, the market was about 340 at 380, pretty wide. But then again, it is CarMax, and these were an interesting strike. Again, pretty meaty for these puts. They went up 365. The stock at the time was 61 and a quarter. So for their sake, we're going to hope that they bought these bad boys, because the stock has sold off a wee bit since they put these nearly $2, about $1.75. So they passed that first test, Mr. Meatball, that the stock is moving aggressively in their favor if they bought these puts. The next earnings announcement for this name is on December 22nd. So like I said, it's coming up this week on our earnings report. You can see the latest information on that, of course, over there on our site, listeners, about the earnings report. So they got a lot of juice baked into this, probably why that put is so juicy. But Mr. Meatball, sir, what are your thoughts on someone looks like paying up for some CarMax puts, and at least in the early blush, getting their money's worth, sir?
Yeah, you know what? If you look at what's going on with Carvana, and if Carvana goes out of business, what's going to happen to the used car market? The trade makes sense to me that there could be real problems for KMX. If there's a collapse in used car prices, they're going to have a problem.
Yeah, CarMax is a whole other deal. They're in business, at least in Illinois. They've been in business, they've been out of business, they've been in business, they get they fines. It's crazy town out there. So yeah, CarMax, clearly a volatile segment right now, used cars, listeners out there. Interesting stuff out here. We'll get you out of here on this one. I think we talked about this one before on the show, but it's been quite some time. This is Infosys Limited. This is an ADR out of India, listeners. This is an Indian IT name. Trading right now, ticker symbol INFY, by the way, INFY. Trading $17.86. Off, let's see, actually up today, up about 13 cents. On the year, though, again, a different story. Off nearly $6 or nearly 25% on the year. A year ago, it was trading $23.69. Got up to, looks like the high for the year was in January, $26.40. And then they kind of came for it. They rallied it again in March. They kept it up to about $24.90 or so. Then they came for this name. They got down to about $17 in June. Tried to rally it again in August, up to a little over $20. And then they came for it yet again. September got down to $16.39. That was pretty much their low for the year, listeners. And then from September, they did try to pop it one last time for the year. They got it all the way up to the beginning of December. They rallied it from the low of $16.39 up to looks like about $20.50 on December 1st. And then ever since December 1st, it's kind of been all she wrote for them, right back down to where they are right now, $17.86 right now. And what did our Eye of Sauron find out there, listeners? Yeah, we like to leave you with a little bit of optimism, maybe a ray of sunshine, maybe a dose of madness, all of the above here. We got somebody, looks like, swinging for some upside fences here in Infosys, doing 4,218 of the Jan 20s, scooping those bad boys up for 15 cents. That is a 34 vol. So all things considered, listeners, not that aggressive of a vol out there. The stock was, let's see, looks like it was a little bit higher. Yeah, the stock was $17.98 when this trade went up. So the stock has moved against them a little bit, but again, not a ton. These are kind of all or nothing calls. You need the stock to be really aggressively moving in your favor, or nothing else really matters. They've got earnings on January 12th. So it looks like they do get an earnings announcement baked into this as well. So, Mr. Meatball, kind of a swing for the fences kind of trade here to leave our folks with something a little bit more optimistic and or crazy. The stock has gotten there not too long ago. The high for the year is $26.39, and they were threatening that level not too long ago. Beginning of December, they were $20.50. So they have proven that they can get there. In fact, just a couple of weeks ago. So 20 strike, perhaps not crazy. They get all the way through Jan expiration, and they get an earnings announcement to boot, sir. So what do you think about these swing for the fences calls, in INFY, sir?
I don't usually love swing for the fences, but you're getting earnings. It could be somebody that knows something. So you never really know, but there's usually a better way than to go out and just buy a bunch of inexpensive calls. There's usually a better trade than that.
Usually is, and all the crazy calls we've seen. I hate these less than others. I'll say that.
Yes. Yes.
I will damn
give them that.
I will damn them.
I've hated things more than this.
Yes, exactly. I will damn them with faint praise. So we'll see how these perform. I have a feeling they may surprise us. We'll see. Just for some fun. We'll leave us with some optimism because, listeners, now things are going to get dark. Things are going to get twisted. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where Uncle Mike takes it all down a notch. Always depressing, always negative, this guy. You can't get an optimistic note out of him to save your life. Uncle Mike, what depressing factoid do you have in store for us this week?
I'm going to talk about shorting stock. And what's funny is that you had no idea that that's what I was going to talk about today. So how appropriate.
I had literally no idea. My gut just told me something was coming.
Something was coming. Very good. So real quick, a quick update for some of our newer, or a quick explanation for some of our newer listeners. If you think a stock is going to go down in value, you don't have to buy it. In fact, if you want to essentially bet on it going down, you can actually sell the stock short. Now, what does that mean? Well, this is done over millions and millions of shares per day. But ultimately, what's going to happen is that if you put in your order at your online broker or wherever that you want to short XYZ stock, what XYZ stock does is they will borrow the stock from somebody else's account and let you have it for the purpose of selling it. Now, because this is done on such a wide spectrum, you won't see it, you won't feel it. You're just essentially in a short position. And your stock could be lent out if you are at a broker. But it doesn't matter because the broker knows that you still never wanted to sell it, but it could loan it out, but it's really a non-issue. So don't get caught up in thinking about that. But what happens is someone lent you the stock to sell that you didn't own. So let's say you sell XYZ stock for $20 per share, and the stock goes to $19 per share. You can then buy it back at $19 per share, and then you give the stock back to somebody that never even realized they gave it to you in the first place, most likely. Once again, all this is done through the broker. All you have to do is simply say, sell stock short when you're entering your order. So that's a way with which you could make $1 in that theoretical instance that I just gave. Now, of course, the disadvantage is that if the stock were to go up to $21 and you bought it back, then you would lose $1 for being on the wrong side of the trade. One of the disadvantages with shorting a stock is that if the stock goes up infinitely, then you are at risk infinitely. Now, likely the risk department would call you before that happens, but nonetheless, you do have infinite risk when you are shorting a stock. Now, what I want to talk about today is something that a lot of people don't realize when they're getting into shorting a stock. That is the dividend. Now, if the stock pays no dividend, then you don't have to worry about what I'm talking about. But if the stock does pay a dividend at all, then you do have to be very aware of this. Whenever a stock pays a dividend, if you're borrowing the stock, because remember, you borrowed the stock from someone else to sell, if the stock does pay a dividend, then you have to pay it because you are short the stock. Now, does that mean that you're paying it in place of the company, those evil corporate jerks? I knew it. No, not at all. What it does mean is that you, because you borrowed the stock from someone else to sell it, that person still wants that dividend because you borrowed it from them. They didn't sell it. They just let you borrow it, or they may not have let you. The broker had you borrow it. You have to be responsible for that dividend, and your broker will give you the courtesy of deducting it from your account for you. Make sure that you have that understanding of it. Now, with that being said, that might sound like something that's kind of a bad deal, and a lot of times it can be, but for different reasons than you think. So when looking at shorting a stock, make sure you have that understanding. Now, how does that relate into options? Well, when you're looking at something and you see mispriced calls or mispriced puts, and you're looking at it and you're thinking, wait a minute, these puts are way higher priced than the calls. I'm shorting this thing, and I'm getting a guaranteed 4% over the course of the next 3 months. It's guaranteed. I mathematically have to get it. How can anyone pass that up? I am way smarter than the rest of the world. Before you start thinking that, the thing you need to look at is that, do they pay a dividend? Because if the puts are way higher than the calls, oftentimes what newer traders like to do is say, I'm going to short the stock. I'm going to sell a put against it. I'm going to do an upside down covered call. But I want to protect myself when the market goes higher, so I'm going to buy one of those cheap calls because the puts are so much more expensive than the calls, and I have this guarantee I can't lose money. Well, where you're going to lose the money will be when you have to pay that dividend. Make sure that you have an understanding of the dividend before you get into a trade like that. So, message for today in this dark day of strategery is that if you are going to short a stock, make sure that you have a good, firm understanding of when the dividend is going to be paid, the ex-dividend date, and everything involving the dividend before getting into it. And that is the strategy for today.
All right, that's going to do it for the dark and stormy Uncle Mike block as we keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everyone, welcome to the mail block, the portion of the show where you folks take the reins, your questions, your comments. We also turn the spotlights back on you. You guys are not shy of opinions on our question of the week. This went live a few minutes ago. You folks are funny. But before we get into that, let's go pay off last week's question of the week first. This one was contentious pretty much all the way through, but it kind of ended up the way I expected. I thought long puts would do a little bit better than they did, but they did end. Actually, no, they still stayed about the same. So not a lot of love for long puts. We asked you last week, which option strategy have you used the most in 2022? And if you don't see our favorite, or I should say, don't see your favorite in the list, then get out there and reply, DM. Give us your suggestions. Like I said, we had a lot of write-ins for not flies, but strangles and straddles, those types of trades. So maybe if we had to do this again, if we could add a fifth slot, that would be it. But we gave you 4 choices: butterflies, condors, so your spreads with wings category. Then he gave you your long calls and call spreads category, your long puts and put spreads category, which again I thought would do well given just what we've seen out there. And then the short put and put spread category. And that one ended up taking it. It was a bit of a battle towards the end of the week between long calls and call spreads and short puts and put spreads. Lots of long delta trades out there. Either way, the short put takes the cake, 32.2%. Followed by number 2, 27.1% for long calls or call spreads. 23.7% for butterflies and condors, your spreads with wings and their ilk. And bringing up the rear on a year where we've been mostly red, including the last few weeks. I thought maybe a recency bias could maybe tilt it a little bit as well. Only 16.9% for long puts or put spreads. Probably also that's reflecting the fact that trying to buy puts and make money this year has been a challenging prospect. Unless you did it very early in the year and you captured some of those aggressive downside moves, outside of that scenario, it really was challenging, especially in some of the broad indexes, to really make money this year, buying and just holding some puts and even monetizing your hedges this year. It was a challenge. I think a lot of people maybe had some of their bubbles burst about puts this year. So an intriguing thing, probably why maybe they didn't score as well in our poll. This week, kind of a fun one. We're heading into that holiday part of the year, listeners. So we thought, it's the holiday season. Many stocks are looking cheaper heading into the new year, certainly than they were at the beginning of the year. If you could receive a gift, remember, emphasis on gift. This is a free call. A lot of you are writing in, I don't want this stuff. It's free. If you could receive a gift of a 10% out of the money call expiring December 31st of next year on one of the following 4 names, which one would it be? So you open up your stocking or whatever holiday you celebrate, and you got a gift looking there right straight in the face. It's going to be a 10% out of the money call on one of these 4. It gave you Amazon, Facebook/Meta, Tesla, or Apple. And this just went live right before the show started, listeners. People are already sounding off. Mizungo18 said no thanks. Straight up no thanks. It's like, It's a free call, buddy. What do you have to lose? Literally nothing. But he doesn't want free potential money. He says no to you. Splendid Vision also saying, this is like picking which lump of coal I want in my stocking. So I picked the lump that has been around the longest. Facebook Meta. Has Facebook been around longer than Amazon? And certainly not longer than Apple. That's an interesting one. Has been around the longest only because the others still have so much more room to give up from the 2021 bubble. Well, again, it's a free call, everybody. So it may be a lump of coal, but it's a free lump of coal. So that's the best kind of coal there is. All right, let's go around the horn. Let's start with the greasiest of Meatball. Mr. Meatball, sir, if you had to pick one of these, as our listeners say, lumps of coal, to get a free, emphasis on free, 10% out of the money call expiring at the end of next year, Amazon, Facebook, Tesla, or Apple, which one are you picking? And which one you think our audience is picking, sir?
I would go for Amazon. I think that's gonna pay you the best.
Yeah, Amazon kind of ran away with it in our Facebook versus Amazon poll from about a month ago as well. And in the near term, Facebook has killed it since then. So it's been interesting to watch. But longer term, folks like Amazon. You think folks are picking Amazon too?
I would think so.
Okay, interesting. Mr. Uncle Mike, same question for you. If you have one of these four resonates the most with you, have at it. And then B, which one do you think is resonating with our folks, sir?
Well, I think that resonating with the audience, I think they're going to say Tesla, just because I think we have a Tesla kind of audience. For the stock itself, I would probably pick Amazon if it were for being a stock holding. But if I get a free 10% call out of this, based on the chaos of everything that's happening and what can go wrong or this, that, or the other, I'm going to go with Tesla.
Yeah, Tesla can do some upside. That call could be 100 handles in the money this time next year. Or it could be completely worthless, right? That's one of those definitely a high vol names. I kind of thought Apple would take the crown, and it seems like in the early voting, those of you who didn't think these were all lumps of coal, those of you who will take your free call, are taking Apple, 38.5% right now. Followed with a tie for number 2 between Uncle Mike's and the Meatballs. We got Tesla and Amazon, both at exactly 23.1%. So that's kind of weird. But again, it is very early voting, listeners. And Facebook Meta bringing up the rear. No love for the old FB, now Meta. 15.4% only. So listeners, get out there. And by the way, if you don't want your free gift, that's fine. You don't need to take it. I just found the vitriol on the free call absolutely hilarious. As we keep on rolling, listeners, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until we return to the live hits on the network for the Thursday episode of TWIFO. In between, I get to do a little bit of holiday vacation in here in the sunny southern studio. Let's go out to the greasiest of Meatballs first. Mr. Meatball, sir, what are you keeping an eye on until our Thursday episode?
You know, what is the market going to do into the holiday break? What's Apple going to do? Is Apple going to fold, or is this or are we going to get a big rally? It's kind of fascinating, though, the movement that we've seen today. And while we've been talking, Vol has gotten a little bit of a bid here, which I think is kind of fascinating and surprising. But yeah, Vol has gotten a little bit of a bid while we've been talking.
Yeah, it seems like the sell-off maybe picking up a little bit of steam now. The S&P was off about 0.2% when we started the show, listeners, and it's closing in on about 0.9% now. So kicking in a little bit to the downside. Maybe some folks thinking maybe there's a little bit more legs to this, because early on in the day, you're right, they didn't want anything to do with any of this vol, and maybe now they're starting to see a reason to maybe buy a little bit of it. Mr. Uncle Mike, sir, same question for you, sir. What are you keeping an eye on until our Thursday go-round?
I'm going to try and keep an eye on if we can still hold. Honestly, I want to see if we can hold the 3,700 level at this point. I think that's a number to where, in looking at this on the S&P in general, 3,700 was kind of a stopping point. You could argue that in early 2021, in July of 2022. So you have that number. And so once again, do I think that we're going to get a lot of major emphasis on urgent buy and sell needs? No, I really don't. But it could be a number to keep in mind. So I'm watching that, and along with some chestnuts roasting on the open fire.
All right, listeners, that is going to do it for our episode of the Option Block this week. Reminder, I am on vacation a little bit now, so no crypto rundown a little bit later today. All you pro folks did already get, like I said, a palooza of content last week, including early hits at a double dose of Options Bootcamp and a double palooza of Options Playbook Radio. Everybody else on the on-demand side, those will be trickling out throughout the week here until we come back live on the show on Thursday. But one more time around the horn, Uncle Mike, if folks want to check out the slew of content you got cooking, maybe keep them entertained on this holiday week, where should they go? What should they do?
Follow me on Twitter at Mike Tusa. I try to put out a good amount of content. Also check out my website, stcharleswealth.com. If you have some questions on this tax harvesting thing of what I've talked about with stocks, give me a call. Would love to have a conversation with anybody.
Everybody loves a good harvest. Head on over there. stcharleswealth.com is the place to go to learn about harvesting strategies. Maybe your crops, maybe a little bit of income. You never know. Over there, stcharleswealth.com is the place to go. Mr. Meatball, if folks want to go to check out the BMF, the Big Money Flow, or the Rock Lobster's new Easy Button, all this crazy stuff, where should they go? What should they do?
Go to options.com. We've got an amazing amount of content that we're putting out every day. It is worth your time and effort. You will leave a smarter trader.
Always good to leave smarter than you came in. Optionpit.com is the place to go. We got to get on out of here. I got to actually enjoy some fun in the sun, listeners. Again, content hitting the network throughout the week on the on-demand side, so stay tuned there. And then back again live on Thursday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.